2014 was the year several African countries issued Eurobonds. This is a popular form of financing development in emerging markets, as there are fewer conditions attached compared to ordinary loans. But it was also a year when local currencies of some major economies took a knock. Nigeria, Ghana, Kenya and South Africa were all affected. The Overseas Development Institute believes this could spell trouble.
In the last year, many African currencies have depreciated very sharply against the dollar, and that means the value of that debt in local currencies has grown. We've calculated it's grown by over $10 billion in the last year.
Economists warn of a slide back into indebtedness. They say this could undo recent economic gains.
The risk of default on government debt in sub-Saharan Africa is growing, and there are two main drivers of that. One is that many countries are borrowing simply too much relative to the size of their economies, but secondly, governments are also borrowing in US dollars.
The slowdown in export markets and a drop in prices of commodities like oil, copper and coal are jeopardizing robust economic growth rates, at the same time undermining countries' ability to repay their debt.
They have been affected by moves in commodity prices, and so for some of the worst currencies affected, for example, have been the Nigerian naira, which at one point was 60% down, it's now 20% down.
Okay. The ODI says the IMF ought to draw more attention to the risk posed by countries taking up too much debt.